All right, now this week is an interesting week. It's not loaded with too much fundamental news. However, there is the USD is the one that's going to be in the forefront for the majority of the week. It's starting to come a little bit under pressure after such a bullish run, and there's a couple of key events that are coming up that will determine certain things. Okay, one to particularly notice and one to see how it behaves against is the euro. All right. So having said that, let me just show you what we have on our news front for this week, and we will begin the session. By the way, if anybody has any questions that you've accumulated over the weekend or from last week, just type them in at any time. As I see them, I will address them as we go along. Okay. All right. So for this week, on the Aussie front, we have AUD data coming out tomorrow, 11:30. Okay, but as I said just at the start, the USD is the one that's really getting all the attention this week. All right, and particularly since it's just come off such a very, very bullish run, and I'm not suggesting that that run is over. All right, but when we have had such an exponential move in one direction, things like when Miss Yellen speaks towards the end of the week has a significant impact on the events that will follow through. Okay, so we have some key figures coming out, and possibly the Yellen's testimony on Friday will have an impacting outcome on the US dollar. If we also take in the euro, there's not much euro happening. We did have Mr. Draghi yesterday come out and pretty much put pressure onto the central bank being the US, that they need to move on their interest rates. Immediately the euro fell again, which basically just comes to highlight how weak the euro is at the moment, or how susceptible it is to any kind of negative impacting news at this present stage. Okay, so if you are trading the news, just be aware that there's a little bit of volatility, and anything impacting or on a negative bias is you're really going to see the euro move. Now, we've been on a phenomenal run with the euro. It had a bit of a bounce. Largely it could be a lot to do with profit taking and hedging as well. Okay, so as we look at the charts, we'll cover those and we'll see what trades we've found for this week, and we will take a look at that in a little bit more closer detail. Okay, so there you go, guys. For the new people, and I see there's at least 5 new people in the room today. These times that you're seeing, this is in my local time, which is Sydney or Eastern Standard Daylight Savings Time. So we've switched into daylight mode. So just please be aware of that. Okay. All right. So I'll bring up my platform and we'll get started straight away. Okay, we'll start off with the Aussie dollar. Okay, and for the Aussie dollar, actually for all the things that I've analysed today, I found there's 4 trades that we have. What I'm going to try and do is where I post up the video for today's session, I'll also try and post up, depending on how I forget at times, but I'll try and post up the trades as well. Okay, in any case, I'm going to call them out right now so you can write them down. Okay. Before I start, I've got getting a question asked from Rick. Has Admiral switched over from Pro to... Okay, let me address this, guys. All of you had Pro accounts, okay? Now, the Pro account was based off an ECN which charged a commission plus the spread. The new accounts that you now have, okay, no longer have a commission, all right, and the spread that you were paying, it's all come down into one simple spread. The reality and the check, it's just gone through some teething and it's all settled down now. What it basically means to you is that your spread or your trading cost has reduced significantly. Okay, so if anybody wants to have a chat to me about it individually, let me know. I'm more than happy to do that. But basically, so for example, what I'm looking at here, if you can see my spread over here on the top left corner, that's it. There's no further commission. That's just my cost of doing business on this particular account. Okay, all right. So the Aussie dollar. Couple of things have happened on the Aussie dollar, and one, as you know, you can probably see from my charts already, we've had a higher high and a lower low. So as you know, when that happens, it's widening my trading zone. So what I mean by that is we came here and we got a lower low, so breaking this point down there, and then the market's gone right back to the other side and given me a higher high, breaking this section here. Usually when the trading range expands, what we then start to look for, it should start to become a knee-jerk reaction. You should now start to look for converging triangles. And as you can see, I've started to draw my lines out. So what I'm expecting or hoping happens is something like this, okay? Or it could go in that direction as well. Now we're definitely not there yet, and this is just the start of it, but as always I draw my patterns very, very early so I can start to look at it. What I can see straight away, and I want to cover this, I'm just going to take a little moment to cover this in detail, because a lot of you have been sending me a couple of weeks back I asked if you see a fib combo, a fib round number combination, email it to me, let me know, and we'll post it out. A lot of you are not quite picking the points in the correct zone, so I just want to cover that in one moment to assist you how to pick better points. Okay, now one thing, let me just go to a blank page or something, give me one moment. I'll just show you my blank screen here. Not sure if you can see it. Give me one moment. No, you can't. Okay. When we pick our points, what we're really, really looking for is we're looking for a significant high and a significant low. Okay? Okay, yeah, I've got it back. All right, so we're looking for a significant high and a significant low. So what do I mean by that? Let me just scrunch up my charts a little bit. If you have a look at this, I just want to take the chart somewhere where the most common error that's happening, okay? Sometimes we're picking points that are in the middle of a congested zone. So we're picking like this point there, okay, or this point here as your significant lows. What we ideally want to see is you want to see the market, you want to see the markets do something like that, and we want to be picking those high points there. Okay, now some of you are not doing that. What's happening is this: the market, we're picking areas like this, for example, and we're getting confused. We're just picking these little points like this, and there's something in the middle of that which is interfering with a proper pattern. So what we really, really want to see is think zigzag. Okay, what may help you is if you just throw a zigzag indicator on top of your chart, and the zigzag indicator will pick the points a little bit easier for you. It will assist you in that. Okay, if you are confused, send me the screenshot and I will tell you yes or no if it's correctly or not. Okay, so now the other thing that will help you as well is zoom out to like a 4-hour chart. A 4-hour chart really catches the high and the low a little bit better. Okay, and if you have a look at my chart right now as I zoom in, what I've basically started today's session with is, let's zoom in a bit more. You can clearly see that the points or the areas that I'm interested in is here, here, here. Okay, now I am on a 4-hour chart. So what I don't want to do is I don't want to grab this point here. Okay, because it's in the middle of all of this messy stuff. So that point there, I don't want to grab it at all. Okay, I hope this makes a little bit more sense and it helps you a little bit more. So with that in mind, what I found for us is the following. If I pick that point and I go right down to the bottom to here, and then I bounce back to this area here, I am sitting on a 61.8, and it's very, very close to the 88 level. Okay, so basically what I'm interested in here is I'm interested in a short at 88. Okay, so let me just place that. Anybody have any questions regarding that one? Can everybody see what we're basically doing? So I'm going to try and catch it at 88. Okay, and I'm going to go for a 2040. So we'll go 88.20 and we'll go 87.60. Okay, let me just tag it and to sell, and there it is. So now we can clearly see my order there's my little green line. So what I'm hoping for is the market to come up to that level and shoot back down. Okay, so there's my stop and there's my target. All clear with that? We all got that one? Yep, great. What I also like about this trade is that if that trade works, it's going to start to fulfill this triangle that I'm thinking is going to happen. Okay, now I always draw my lines onto my charts and I just leave them this way. What it does is the next time I look at this chart, instantly I know what I'm looking for straight away. It also shows me if it's panned out or not panned out, and you start to gain a lot of market experience simply by just drawing on it and then coming back and seeing if what you had drawn was in fact what panned out or did not. Okay, so we've got a sell at 88. It's a 61.8. It's on the Aussie dollar. Okay, that's pretty much. There's a little bit of news coming out tomorrow. Aussie dollar, of course, it will be influenced by a lot of US data this week, but I'm happy to place that one in there. It's a 61.8 with a full round number. It's my favorite combination. I cannot ignore that. Okay, we all good? Lois is asking, what angle is the top line drawn? Lois, I'm really just speculating on this top line, so I could really just make it like this, or a little bit less. I don't actually know. I just simply draw it in right now just so that the next time I look at this chart, it just reminds me of what I'm actually looking at doing. The only one that I kind of know is the bottom line. That's it. Okay, now one thing, there could be a really good shorting opportunity. Let's say the market now comes down and we keep, and this 88 sell does not come into play. The other option is with so much US-based data, if that US-based data comes in strong, okay, what could happen is if we break these lows down here, we could get a really nice entry to continue to see our dollar slide further. All right, that one there, I'm not going to place an order. I have to really watch it, but just keep that in the back of your mind if you are interested in that scenario. Okay. All right, so I'll move on. Let's have a look at the Euro USD. Okay, Euro USD, straight away you can see my chart, and it looks very, very similar to the Aussie. Okay, the only thing is this one is broken lower and broken higher in a much more significant way. So you can see there that it's taken that one out and we've taken that one out as well. So what I'm basically looking for is I'm looking for this type of behavior. Okay, so I really, really need to wait and see as we get towards the edges of these lines. Now remember, before it becomes an official converging triangle, I must have at least 4 touches. So it will be 1, 2, 3, 4. Once I have this many touches, then from this area I can start to look for the breaks in the trade. Okay, so very, very important. And remember, you can adjust this line up and down because I don't know exactly where this touch is going to be. All right, so just keep that in the back of your mind. Now, I did try and find us some fib levels on this one, and let me just double check. I just want to say I've drawn from down here to up here, and I don't really have any full round number combinations. I've got a 45 over here, but that's not close enough. Got a 21. I'm on a 4-hour chart. I'm happy with the levels. The levels I'm happy with. So there's this week on the Euro USD, there is really, I don't have a fib number combination. Okay. Now let me pan out to a daily chart, and I just want to show you something. Actually, quite a few of you noticed this and sent it to me. On a daily chart, we had what looked like a bit of a railroad. Let me zoom in a little bit, and it was in the combination with a fishing strip strategy. So let me just overlay a Bollinger Band so we can see this. Okay, let me just get rid of my fib. Oops, not that. Okay, you can see here, for those of you who know this strategy, that we had the Bollingers come through right there. So we had a setup of these two candles, and basically it hit the first target, it's got to the first, and now it's pulled back. Now this pullback has been caused by, at the moment, the euro is like very easily spooked. So any bit of bad news or strong US data and it just shoots down. It's been on an incredible run downwards, and the momentum is still very heavy in that way. There appears to be a bit of support around about the 125 level. Okay, not enough for me to really want to take a long trade, or as in a larger move. Okay, so now should we break 120, it really, sorry, 125, it really does open up the doorway to the 120 level. Okay, so you're going to really have to watch this, because if you want to trade this and all this US news this week comes in strong, we could really push towards that 122, 123 level by the end of the week, which basically opens it up all the way to the next major significant level of 120. Okay, keep drawing your fibs, stay on 4-hour charts so that you can find them, because as soon as you hit a level, by all means, start to throw in some pending orders. Okay, so I'm staying on my 4-hour charts here. Let me get rid of these Bollinger Bands now. Okay, and what I'm really looking for is, if we do get this bad breaking, good strong US data, what I'm looking for is I'm trying to settle this triangle in, and then as soon as I get the break from it there's a very good trade this way. Okay, now we've seen a number of these over the past few weeks, and we've seen how rewarding they can be. So we do have enough experience now to be able to pull the trigger on them. So really, it's up to you now. You need to watch this pattern. It may take a whole week. It may be ready next week. But either way, just start to watch it. We do need 4 touches first before we can start to trade off it. Okay. At the moment, right now, there's no fib levels. So really, I'm in no man's land. I'm doing nothing on the Euro USD. Okay. Oh, hang on. I just saw something. Give me 1 second. Just want to check something. One thing. Oh, look at that. I didn't see that before. Can everybody see it? Help me out. Can you guys see that? Yep. So what indicator do I want to add now? Very good, Elizabeth. Let's check for divergence. So let me add in my awesome oscillator. Let's have a look what's happening here. Okay. So I have complete 4 touches here. So I've got a proper channel. So keep a lookout for that triangle, but I think this is going to supersede it. So let me just get rid of that so it doesn't throw me off. And we could get an early break of the channel straight away. Look for behavior if this comes over here. Okay, we're going to need to look for that. And then if it doesn't and it goes up here, check the divergence there relative to, hopefully, if it looks like this, that's it. You've got to trade back down the channel. Does everybody understand? Did I mess up the charts too much? Let me just clean it up a little bit. So what I'm saying is, if this current movement right now continues to go up to here somewhere, when we get there, we know the slope of this channel. What we need to do is check out what this, if this turns out to be down there, for example, then we have complete divergence, and that would give me a lot of confidence to trade back into the channel. Okay, can't give you a level, but I just saw that. I can't believe I didn't see that before. Okay, so there you go, Euro USD. Any questions on it? No, we're all good? Let's move on. GBP USD. Okay, GBP USD, you can see here I've already got, I'm on a 4-hour chart and I've already got a triangle happening here. I've got 2 confirmed touches down the bottom, 2 at the top. I'm loaded, I'm ready to go. So what I'm looking for, what I'm really looking for is to see what's happening at the tops every time. Every time we get to the perimeter, I'm happy. Now which way we're going to trade here, guys? Tell me. Say from this point here, from where let me just scribble that out. From here, am I allowed to trade both ways? No, guys, I can't trade both ways. I can only trade up. Okay, I can't short where I've drawn that marker. Okay, well, technically I can, but the probability is much smaller here, and your profit target area becomes compressed. Remember how this works? What are we looking for? This, the aperture, is my target. So this is my target. That aperture is way bigger than what I can squeeze in here. Okay? So this is we don't want that trade. The trade that I actually want is this one here. Okay? Or in the other direction. Is that clear? We understand? Does that make sense? Anyone confused? A triangle is different to a channel. A channel, there's a lot more room, so you can actually trade inside the channel much more comfortably. You don't want to be trading inside a converging triangle, okay? Because what can happen is it can come there, come down a little bit, and then just explode upwards on you, and that's it. You're gone. You're blown out of the trade. All right. And to get the ratios correct, the way it works is, let me just rub it out so I can make it clear. Let's say we did take the upward trade. Okay, we can clearly see that graphically that's it. That's my target. My stop from this area could be here, and you can see that it's a better than a 1-to-1 ratio trade. Okay, so that looks to me at least a 1.5. All right. Whereas if you trade inside the channel, inside the triangle, well, it's just not the way that you do it. Okay, so you got to always trade the break on the outside. And if I had a choice, which way would I prefer? To break the top or to break the bottom? Which one? Okay, we've got most people are saying the bottom. Some people don't know. Okay. From the information that I'm showing you, it's a little bit hard to make a decision, so let me just pan out a little bit more and let's see if it changes your minds. Let's have a look. Let me zoom out a little bit more. What about now? Which way would we prefer? I'm on a 4-hour chart, by the way. Probably, I wouldn't mind taking it either, but I would favour the bottom a little bit more because look at there's all this pressure, okay? And it looks like the market is now having a breather. And then if it just shoots down, and especially if we get beyond 159, that's it. It opens up the 156s and 57s, and which basically there's a lot of meat in this trade. Okay. All right. So GBP USD, I don't actually have a level for you. Okay. Just keep checking the every time the market comes up to these levels that we've stipulated. Okay. Draw these lines onto your charts. And as you come up, then look for, remember, how do we trade it for the newer people in the room? Let's say if it comes down, what we're looking for is we want a bearish red candle. If it looks like that, basically on the open of the next candle, take the trade. Or alternatively, the little bit softer or more conservative entry is what you'll be looking for is a breakdown. Okay, make sure that that break takes out the previous low like that. Look for a little bit of a pullback and then get the trade in there somewhere. Okay, that's what we would be looking for. Okay, I'll move on to the next one because I don't have a trade for you. I don't have a level on this one, but we do have a very valid setup in mid-process. So let's have a look at gold. Okay, last time we did this, we noted, well, I drew this channel, this channel, but at the time, I think gold was up here somewhere, so we had not reached this level here. Did anybody trade this bounce? Anybody trade that bounce on gold? No? Now, there was if you didn't get the bounce, we also had somewhat of a railroad pattern as well here, okay, which meant at this point here, there was a really good opportunity to enter this trade. And one extra factor about this one as well was Lois traded the railroad, fantastic, and what I liked about that railroad is that the bottom made the channel work. Okay, so the channel at the time really wasn't a channel. I was just thinking it would be there or thereabouts somewhere, and it came to it, bounced off it, railroaded, and let me show you this. If I throw some Bollinger Bands on there, can you see that now as well? Also, it gave us a fishing strip entry as well on a daily chart. Okay, so there was 3 reasons to take this trade, and if according to fishing strip, it's just about hitting the second target. Okay, so if you traded that one, well done, very well spotted. So what do we have on the agenda for it this week? So what have we got? What I've noticed, and you can see that I've drawn in this grayed out area onto my chart over here. We've got a little bit of memory left in the market from this low here. So at this point right now, before I want to go long, if you want to call it that, I really want to be clearing this area before I attempt to trade that way. Okay, if this channel holds, okay, and it does do that, then now I'm in channel trading mode, and I'll be very interested to see what happens there. I'll be checking for divergence, okay, whether I can trade back into the channel or out of the channel if I get a break. Alright, so these are the options that I have right now. Since I'm very much not quite in the middle but very close to the middle, I'm not willing to put any trades on gold at this stage, okay, other than I need to watch and see what happens as the market, if the market moves up to this level, or if the market comes back down here. Now, with a channel break, you always trade against the gradient of the channel. So I really would not be interested to trade here downwards. Oops, you can hardly see that. Let me just move. So what I mean, if I repeat that again, with a channel break, go against the grain. Okay, see the gradient is this way. So that means if I'm going to trade a break-in channel trade, that's a break-in channel trade. This is not. This is a much harder trade to take. You need a lot. Basically, don't take this one. Okay. So the types of trades that I would be looking for when I've established a channel, like I do right now, I'll draw them all in. These are all the valid ones that I would be looking for. At this point, I'm happy to go that way or back in to the channel, and at any of these points I'm happy to take that option. So basically there's three. Anything below that I will not. Does that make sense to everybody? Lois is saying that there's divergence here. Let me check that, Lois. Yeah, there's a little bit. And consequently, if you'll probably see it on a 4-hour chart, I think. Let's have a look. There was a little bit leading into that move. Okay, so there was a little bit of divergence leading into that move there, but not this move here. Okay, so this one here, it didn't really catch it, so you wouldn't have been able to trade that based off divergence. That trade you would have caught because it was a railroad and it was confirming the channel. It's the only way that you really would have caught it. Okay. All right, I'll go back into that. So we're all clear for gold this week. And consequently, that big triangle that we were trading has done quite well, which was the original triangle that we had up there. It broke down really nicely. Okay. All right. Let me move on to the next one. Okay, US yen. On a 4-hour chart, let me just quickly have a look at the daily. Okay, remember what I was saying, US has been pretty much, the dollar's been on a rampage. You can see there's a big exponential move which basically runs from about 101 to about, and we actually hit the 110 that we talked about as this was happening. So it's about a 900 pip movement, and now we're starting to get a little bit of a pullback. Okay, so what may take place this week, there's a bit of news that will impact all of this, but if I go into a 4-hour chart, there was one level that I liked. If I grab this point here to this point here on a 4-hour chart, and I go all the way to here, I'm on a 50% retracement. It falls on 108.48. It's not the best combination, but it's all right. Okay, I don't mind it, and I'm happy to place a trade there. So basically, the trade would be, it's a 108 sell. Okay, and we will go I don't usually like doing 2040s on a 50, but the market's a little bit jumpy and volatile, so let's do it anyway. Okay, so let me just erase this and I'll place it. Does anybody have any questions on it while I place this order? Okay, I'm going to try and catch it at 108.50 even, which puts my stop at 108. What have I done here? 108.20. No, sorry, 70. And my target is 108.10. I'll just tag that order. And looks good. Any questions on that one? So we can see what we're trying to do is we're hoping that the market pulls back to the 108.50 level, triggers our trade, and then bounces downward to our target. Should it go wrong, there's our stop just there. It's clearly a 2-to-1 trade. Now, if this level continues to go down, so this continues to go down, basically you're going to have to redraw your fib, and this trade may be void. Okay, so you may have to come back and cancel it out. We all clear on that? Yep, all good. All right, that's the dollar yen. Pretty simple one this week. It's clearly a nice level. I'm just hoping that this holds, otherwise we're going to be left with an order that does nothing. Okay, I'll move on. Let's have a look at the euro yen. Okay, euro yen. Now I've got a really nice order here. I really like this one. It's a full decade round number combination. I'm just hoping that this bottom holds. So what I've done is I've drawn. I'm on a 4 hour. I'm on a daily. This one's off a daily, and you can see if I drawn from up there to down here, and then retracing all the way to the 78.6. It falls on the 140. That's a huge round number, and what I'm going to try and do is give it a little bounce as such. Okay. Now I'm just going to place this. Does anybody have any questions? If anybody can see something different on any of these charts, just type it in. I'll have a look at it as well while I place this order. So I'm going to try and catch it right on 140. It's a sell, by the way. So 140 sell, so my stop is going to have to be at 141. Sorry, 140.20. We'll do a 2040. And my target will be 139.60. Let's tag it and place it. Okay, there's another order. Ignore this bottom red line here. There's another trade going on at the moment on this account, so just ignore that one there. But basically what we're trying to do is that. On a daily chart, it looks quite scary. Looks quite tight, but don't panic, don't worry about it. We are very, very far from the market. I know we're basically placing an order which is almost 300 pips away from where we currently are. Don't worry too much about that. I did consider the 61.8 as well, but it's at 139 05. So look, if anybody wants it, that one's not bad as well. Okay, so what I'm trying to say is if anybody wants to place an extra trade here, you could try and get that one. It's not exactly a round number, but because it's so far from the market, you could consider it. Okay, but I'm just leaving that. The 140, it's right on. I can't ignore that one. Okay. Can you guys hear me still? Someone's saying that they lost audio. Yes, you can? Okay, fantastic. Thank you. Question being asked, if the redraw is another fib round number, could you take it? Yes, lowest, yes. Okay, the question that's been asked is, let's say that this market continues to go lower, and what I have to do is draw my fib to, say, I'll make it land somewhere like this, for example. So let's say that where we currently are, here, the market goes down and goes to this level here. So I redraw the fib levels like that, and now I get a combination here at the 136 hold number, then this becomes a valid trade over there. And then I would have to go back and see if this one here is no longer sitting on a fib number, then I come back and cancel that trade out. Okay, yeah, I think that question was asked on the US yen, but the principle's still the same. Okay, so yes, if we get a new low, you must redraw your line, and if you get a different combination, well then you can still place the order and cancel out the other one. All right, so we all clear? Euro yen, what we've done is we've basically placed a 140 sell, and it's a 2040 trade. Okay. Okay, Rick, yeah, that was on when I redrew. You could have got another level at 137. Okay, but right now, for the more aggressive traders, you could get a 61.8. It's at 139.05. It's close-ish. It's far away. You can place it if you like. Okay. All right, I'll move on. Kiwi dollar. Kiwi dollar, I really don't have anything. I just look at this chart, and the only thing that I can see on a daily chart is that I can see that it's starting to want to congest. As you can see, I started to draw my box around this area. So I really just have to monitor it and watch it. As I move time frames, say a 4-hour chart, you can see I try to draw some channels in here. There's no channels happening. There's no triangles. All I really have is a congested area. So you're just going to have to monitor it. And if anything, I do prefer that we just keep falling down. Okay, so then these levels here start to become key. Okay, if you're looking for a break down type of trade. The only thing is that we made a little bit of a higher there, but we still haven't broken these lows, so it could just be a congested period. This might be one for you to practice a ranging trading strategy while it settles in. Okay, and there was, I think it was week 5 or something, we did a range trading with pending orders with the Bollinger Band. So this is one that is meeting the criteria right now, and until it comes out of that, you can get quite good results with that type of strategy. All right, so for right now, I don't really have anything on the Kiwi dollar. This is what I would be favouring. I'd be favouring a breakdown. Not really ready to trade it up, even though it's moved so much in one direction. The tendency is that, yeah, we want to give it some kind of a bounce, but you can see that the market's tried to bounce and it just keeps coming down. So if anything, I think this is a much higher probability than this. Okay, so from a probability standpoint, this one down is what we're kind of looking for. But remember, trading is not about being right or wrong. It's about identifying a movement and joining in to take advantage. That's it. So if it does go up, I don't get upset because I'm not committed to a trade. I'm just basically looking to see if I can get the opportunity to basically take this right down. Does that make sense to everybody? Great, thank you guys. Alright, so Kiwi dollar, if anything, you can practice a ranging strategy on it. Alright, it looks to me like it's going to just mess around in there for a little bit before it makes its move out or up or down. Alright, so with that in mind, we'll leave it there and we'll move on to our final pair for this week, the Euro Aussie. And what have I got? Can everybody see the trade without me highlighting it to you? Let me just zoom in a bit more. Who can see a trade there? Type it in if you can see it. Great, Rick's got it. Anybody else?
Okay. And do you also have a contact number for us at all?
Okay.
I'll put those details in so on the system.
Yeah, Elizabeth's got it. Bajan, not quite. Anybody else?
Send me drop me a line on the email.
Alan's got it. Okay, let me show it to you. Well done, guys. Look, I'm always going to provoke you to give me a bit of feedback. It makes it more fun for me to run this class, and it also, the more you get involved, the more you get out of it as well. So if I'm on a 4-hour chart, by the way, so if I take the low and I draw it to the top, which is already on my chart, and then I come down, if you notice here, I get a 38.2 retracement on a 145. That's a huge, it's not a decade, but it's a half decade, so I am ready to have a go at this in this direction. Okay, that's the trade. Most of you got it, so let me just place it. Okay, I'm going to try and catch it smack on 145, which makes my stop 144.80. We'll go 2040, and we'll go for a target of 45.40. Sorry, had a mind explosion there. Let's tag it Monday, and let's place it. We can clearly see now that what we're waiting, we're very close to trigger, by the way. We're coming down. We just want to get triggered in here and bounce. So we're only 18 pips away from getting triggered. So this one, it's got a good chance. Okay. Now, should it not trigger and then just continue up, or then basically as soon as you break that level there, that's it. The trade's over. Okay. You've got to go back and cancel because you're going to have to make a new high. And meaning you're going to have to redraw the fib levels. Okay. Any questions regarding that one? The target, Rick, was 40 pips. So I'll just summarize. Let's see what we got. 45.40. Okay. So for the newer people in the room, the type of trade that we've done today is, I call it a 2040. okay, which basically my stop is 20 pips, okay, over here, and my target, my TP, is 40 pips. So it's a 2-to-1 ratio trade, and I like to do it when we're combining with a nice fib level with a nice round number or a half round number. There is a class that I do on this. It's in the library as well if you want to go back and review it for the newer people, but that's basically what we run. Now the beauty of running at 2-to-1 is that we can be correct even as low as 40% correct trades, and it's still a profitable system. And I think from the numbers that I've been tracking, we're running at about 50%, maybe slightly less than 50%, but because of the 2-to-1 nature of the trade, it's still a healthy combination. Okay, so whenever you see these, sometimes I will run at a 1530. Okay, usually I'll go for a 1530 on a half round number, so like on a 40, instead of 4500 it'll be at 4550, for example. Market's been a little bit more volatile of recent, so I'm sticking with the 2040s at the time, but when the market slows down a little bit I can come back and put less risk on the table. Okay, does that make sense to everybody? The major key with this method to get an, if you pick the major key is to make sure that you've got the correct low and the correct high. If you're picking the correct lows and the correct highs, you will run at about 50%. If you're finding that you're running lower than that, what it means is that you're not necessarily picking the best points. So for example, I'll analyze this chart right now because this is a really good example. For example, this is clearly the low. Okay, I'm on a 4-hour chart, but if I move this level to up here, okay, it's not necessarily the best point. It's still a low, but it's not the significant low. So what I'm trying to say is this low here is much better than this low for this method. So what I would do is I'd pick that one. That clearly is the high. Now if I had picked this level, you can see that it actually gives me another trade over here at the 144, okay, which, look, it could work out, but it's not the best low. So you'll find that the method works better when you actually pick a significant low. Now this confusion can happen when you step in your time frame. If you step into a 1 hour or a half-hour chart, you start to not necessarily find the best points, okay, and I'll show you, because if I step into, say, a 1 hour chart, it changes the dynamic of what we're looking at, okay? So it depends on how much I zoom in and zoom out as well. Okay, you can see that this level now looks kind of alright. It does look significant, but there still is something there, alright? So that's why I usually try and stick with 4-hour charts, because this becomes a bit blurry and it's much easier to see the significance of the points that you've chosen. So on a 4-hour chart, there it is. You can clearly see now that I should move this one to that level there, which basically triggers the level that we've got. Okay, so I hope that makes sense for everybody.